So now, help me to welcome on stage my next panelist. I will call first Mr. Mark Price, the financial head of capital markets at Standard Chartered. It will be followed by Mr. Alain Lomin, CEO from MCB, Mauritius Commercial Bank. Then I will help me to welcome on stage Aliou Maiga, Regional Industry Director for Financial Institution Group within IFC. Please help me to welcome then Mark Elliott, Division President Sub-Saharan Africa within MasterCard. And finally, Mr. Temi Popola, CEO of the Nigerian Exchange. Please join me on stage. So, you have 1 hour now. You don't have a mic? Okay, let me take a mic for you. No, it's okay. It's not working. It's not working. So let's start, because as I mentioned it earlier, last year we saw two major achievements in capital markets, so the PAPS and pilot project and the ALP Link interconnection securities trading platform. In the long run, these initiatives should increase the free movement of capital among African countries without routing through a third country. This is what Mr. Professor Rama said earlier, and promoting economic integration. But how can the countries take advantage of these platforms given the difference between the currencies and border control and regulations? So I will address my first questions today, and my first question to Temi Popola. ALP Link, so I know you can present it to us, but and you will present it to us, thank you, please. I want to discuss the ALP Link and the impact it has on the capital market. And I want you to explain the audience and myself to which extent has this interconnection been successful so far? What problems could be solved to leverage this potential of innovative platform? And can we find ways to quantify the benefit of when we have an AFCTA that works well and a past sort of mechanism for the capital markets?
All right. Thank you very much, Rama. And let me say good afternoon. Oh, it's good morning to everybody. It's a pleasure to be here. So I think the easiest way to think about the AELP, it really follows from some of the conversations that we had earlier. When you think about capital markets, whether those are capital markets at the local in-country level or capital markets across the continent, there is perhaps two ways to think about the challenges that those markets face. One of those challenges, think of it more like a macro type picture. Most African countries, there's just not enough level of savings, for example, in those countries. And if there's no savings, it's very difficult to have developed capital markets. You have challenges around financial literacy. For example, if people just don't understand financial markets, they won't come to capital markets. But these are big picture sort of challenges. The second way to then think about the problem is that if, for example, you solve these problems, or perhaps despite these problems, how then can you try to address capital market growth? And then you get to another level of problems that are a little bit more controllable, more within the control of regulators, of capital market operators. And the two chief of those challenges, one is just around technology. Frankly speaking, to say that how can you, through tech, get capital markets to scale up? Because through tech, then capital can flow easily. Through tech, your retail investors can get connected. And then the second challenge is currency settlement. So, for example, if I look at Nigeria as a very good example, what of the data that I find very interesting is that, for example, in the year 2021, which is when the last data is available, the total amount of capital flowing across people, so I move money to you, move money to the next person, and just money flowing around in country in local currency is to the tune of about $100 billion. So this is just money velocity. Now, when you ask of that $100 billion flow, how much of that made its way to the capital market? It was about $1 billion worth in that year in question. So right there you see that the challenge isn't that there isn't local capital. It's just that that capital struggles to flow freely in country. And when you look at across countries, you find a similar challenge. And so this brings you right back to the discussions we've had around PAPS, around the AfCFTA. And so what the African exchanges did was this idea to say, look, let's find ways to connect the exchanges to address some of these challenges. And that connection really then is at the heart of the two challenges I spoke to. One is just pure technology, the way to connect these exchanges. You can either, for example, manually connect the exchanges, but then you can do that through technology. So today, that technology portion has been done. It's been done both by the Association of Exchanges, where now there's about 7, 8 exchanges that are connected to one order book. You can sit in one country through the trading application and see flow and trades and research across those countries. It's also been solved through technology. There's now a proliferation of tech providers. You can sit today in pretty much any country, use apps, and get access to any of the most exchanges in the continent. So that problem has been solved, and that's what AELP has done. The second real challenge then is that even now that the exchanges speak to themselves, there's no point if I'm trying to settle a trade perhaps on the Nairobi Stock Exchange, I'm in local currency and they're in shillings, and this is where PAPS comes in. I think back to your question around data, we are of the view that if you can address these challenges, the level of flows in country and across the continent should scale up about 10 times. The final thing I'll say is also what that helps us to address is technology know-how. You find different pockets of exchanges on the continent who are advanced in different tech ahead of each other. A very good example is Ghana. Ghana did this remarkable IPO for MTN, the big telecommunication company, and they adopted technology that was the first of its kind on the continent. With a lot more of this integration, then you don't have to start that process at each sort of country level. You can scale that up relatively easy. Let me stop it there. Thank you.
Thank you for the explanation of the success of this interconnection. And I will shift to Alain, because Alain is the CEO of the MCB, Mauritius Commercial Bank, and the Stock Exchange of Mauritius is among the first exchanges that have been connected to ALP. What opportunities could be derived from this platform, and how can the Mauritius IFCB leverage?
Thank you, Rama, and very good afternoon to everyone. Following on from my fellow colleague speaker, I think there are enormous opportunities today with the 7 exchanges, as far as I know, which are connected and which covers like 14 countries across the continent, which is in fact 90% of the market capitalization across Africa, which is enormous. So we've already got that critical mass of corporate customers listed on the different exchanges. Looking at it from, as you know, Mauritius is a small country, and we tend to be more like a laboratory because we see everything happening in a very small place, which is unlike bigger countries where you'll probably have a bigger difficulty to get into the dynamics. Mauritius, being an IFC, already attracts a substantial part of investment of capital into Africa. In fact, 10% of FDI transits from Mauritius to invest into the African continent via the different countries. So essentially, those FDI are from private equity funds. So Mauritius is well known for private equity funds setting up in Mauritius. And I do believe that with those funds trying to find its way on the continent, today it's fairly the standard way, through correspondent banks, through investment directly into those corporates. Eventually, as you know, private equity funds, they look towards exiting the investment, would be listing on the stock exchange. And I think it would be an enormous opportunity to use that AELP, the framework of AELP, to be able to exit much more efficiently their investment. The other thing about looking forward, because again, we're setting it up, it's a beginning, and as our distinguished speakers said in the beginning, it's a journey. I do believe that if you look at the wealth progression on the continent, it's probably one of the continent where wealth is likely to progress quite quickly with the development. And this would be an enormous opportunity for that wealth to get into the stock exchange. Obviously, with financial literacy improving, it will help to flow the funds into the different corporates that are setting up on the African continent and are being listed.
Thank you, Alain, for giving us how it works with the Mauritius Stock Exchange and how the interconnection has benefited to the Mauritius Stock Exchange. Now let's shift to one of the issues that the continent, and not only the continent, is facing, given the current dollar shortage in Africa. My question will be dedicated to you, Mark. How can a non-dollarized free trade area in Africa be disrupted? And is that possible according to you?
Thanks, Rama, and I'm very pleased to be here today, so good morning, everybody. If I build on what Professor Arama said, globally free trade has multiplied massively over the last 40 or 50 years. It's built the economies of countries like Singapore, Korea, Taiwan. And unfortunately, due to many different reasons, I think Africa has missed out on that growth that the rest of the world has seen. Partially because of the topic of an excellent session yesterday, the chronic shortage of US dollars within Africa. Partially because of some of the infrastructure challenges, ports, rail, roads. And luckily, we've seen a lot of that being tackled across the continent over the last 5 or 10 years in particular. But the challenge around the dollar shortage still exists. So as I learned more about the PAPS and the Africa Free Trade Agreement area over the last year or so, it's been fascinating to me. I really do think that is the disruptor that Africa needs. PAPS building on the ALP link to help both that sort of capital markets activity happen, but also the free flow of trade across the continent. Why is this so different? Professor Arama talked about the costs and the challenges around having to go through via a foreign currency. They're very real, and whilst PAPS is only in 8 markets at the moment, certainly if we can speed that up and move into other markets, the dependency upon the dollar goes away. And it really is that chronic shortage of dollar flows that I think holds a lot of this back. It isn't just that, though. I think His Excellency also talked about tariffs, also talked about some of the border control issues. There are many different things to fix, but I think now we have got some of the building blocks in place that are going to allow us to do that. I think we have got core technologies that are coming into place more widely around the world that we'll probably talk about a little bit more around CBDCs, digital assets, etc. But I think we're finally heading in the right direction, and the more that Africa can do to use non-dollar technology capability and to flow that capital, to flow against trade payments, the more I think it can speed up and catch up on some of the historic benefits that other countries have received over the last 40 or 50 years.
Thank you, Mark. And I'm pretty sure that Mark, the other Mark, want to comment on it and give us your vision on the potential of these innovative platform again.
Thank you very much, Rama. So, I mean, I think just in the spirit of keeping the thread going on PAPS, clearly local currency settlement is critical. We need to get there. I think also, though, we also at MasterCard obsess with the actual cost to the customer. You know, if you look at best in class, you're probably looking on a remittance. Southeast Asia is probably around 4.5% cost to the customer. On the continent, it's probably nearer 7 to 12%, depending on which country you're talking about. And so we really need to kind of solve for that. We see that SWIFT in itself has probably got multiple issues with it. It's not just the correspondent banks. And by the way, that compounds every time somebody acquires a new bank because you inherit all of the correspondent banks with that. But also due to the reconciliation issues between what you actually send and what you receive, the length of time it takes to happen, et cetera, et cetera. So there are issues. I think it's fair to say, though, that we at MasterCard have developed something, Transfer Solutions, which is a remittance solution, and we're hooking up the markets across Africa. And I believe that as a platform, that is a way that can actually provide the rail, which can work with the likes of PAPS. So I think PAPS is going to provide a vehicle for all of us to work with and work around, and we can provide the mechanisms for that. I think what's also important, though, I've just spoken about the consumer, but if you think about the next swathe of growth across the continent, we also have to see that the SME is very underserved. So if you look at Nigeria, 43 million MSMEs, that's a huge number. Probably there's about 15 million MSMEs in that number, which we need to, you know, bridge the digital divide and bring them into the financial ecosystem. And so the opportunity affords itself around remittances through these types of platforms to actually give them the tools they need to actually make trade payments. So we really need to have a good eye on that. I think it's also, you know, talking about innovation, you know, when we talk about those types of segment opportunities, we also need to think about other platforms. And so, you know, at MasterCard, we're also very obsessed with something quite different, which is in the agriculture sector. So we've developed something called FarmPass, where actually people don't necessarily, the farmers don't have an identity today. And so in FarmPass, we actually create a functional identity by allowing them to plug into the platform to actually miss out the middlemen, sell their produce directly to the buyers. And also it gives them opportunity for the agri-providers to sell into the farming community. That then builds a data record, which then can be leveraged by the banks and the other FIs to actually make credit available. And as we know on the continent, only 3% of credit demand is met. So that's not because the regulators don't want to do it, but it's because the banks don't have the data in order to actually make that lending decision. So there's a huge opportunity, lots of innovative platforms, and I think we just need to work a bit better together to make it happen.
Yeah, and this is what work better together to make it happen. This is what we exchange when we look at this session, and I will maybe finish and give the floor to Aliou Maïga. How can we work together better to make it happen with those digital innovative platforms? What are your thoughts?
Is it working?
Yes.
Good morning, everyone, and it's a pleasure to be here. I like the word "make it happen." You know, one of my clients and mentors in life told me, you know, what Africa needs is people who can think big and can make it happen. I think, you know, thinking big is always possible, but making it happen is where the challenge is. So I would like to just thank the AU and all the partners who are working on PAPS and ALP, because those are big ideas. They will take, you know, time to happen, but it is important that we start now, like the EU did 50 years ago. So just to set the rails. Now coming back to the challenge that we are facing today, maybe just to take it one step back, dollar shortage is more of a reflection of structural economic issues in Africa. I think we just don't produce enough, and then we import a lot just to live by. And I think that's what we need to change. When Europeans and Americans discuss trade agreements, it's not about the flow of goods. It starts at the production of goods. And I think we have the potential to produce everything we need, at least on the food side, and we should invest in that. And to make it more practical, every time you have a major global shock, you have this dollar shortage, which is just a reflection of what I just said. And at IFC, since 2008, when the first financial crisis hit, we started building platforms. So we have a number of platforms that we developed. The most known is GTFP, Global Trade Finance Platform, which was developed to just cut the need for African banks to post cash collateral abroad to be able to do trade. And then we launched the Global Trade Liquidity Platform, which was a way to inject dollar liquidity in African countries and emerging markets. And now we pump like billions of dollars a year. Just the Global Trade Finance Platform in Africa, we did 3 billion already. And we plan to increase that. But more broadly, I would say, whatever, initiatives such as PAPS and ELP, we can really fast track and accelerate will allow us to, provide goods and services that support commercial transaction in the economy at efficiency levels and cost levels that reduce our dependency on abroad. I know there is ultimately a need to reduce our dependence on the dollar, but we also have to realize that it's also a geopolitical goal to maintain that dependence. So it's a matter of a balancing act. We can't cut ourselves completely. At the same time, we need to build, our autonomy so that we can, function within Africa, across countries, using our own currencies without going through the Europe or US.
Thank you, Ali, for this conclusion. Let's move now to the digital financial services and infrastructure that we need to be more efficient and the regulated system as well. Because most of Africa already uses digital wallets or mobile money, etc. Therefore, people are very familiar with the concept of having a digital infrastructure of money. However, the infrastructures exist less at a commercial level. How, and this is my question to you, Mark, again, how can we scale that retail level digital infrastructure to allow more commercial enterprises to be back on the same digital infrastructures?
Thanks, Rama. I think you have to start by appreciating the difference between what happens with retail money flows versus commercial. So the first thing is that they operate 24/7. And that's not something that any bank in the world that I'm aware of does. I know my bank doesn't. I would like it to, but it doesn't. And neither do some of those systems that we've talked about around the correspondent banking system, SWIFT, et cetera. They just don't work 24/7. So I think that's one major thing that would need to shift. So when we talk about the development of PAPS, thinking about can that be shifted to be a 24/7 capability, would be a very, very interesting development that would allow that flow of money at a commercial level at the same speed as at retail. I think another challenge that needs to be tackled is retail wallets tend to be quite KYC light in terms of, almost anybody can set them up, almost anybody can send money from one place to another inside of the wallet. That doesn't really work for commercial flows and some of the checks that banks have to take account of around know your client, et cetera. So I think thinking about how you can create that eKYC, that digital identity at an institutional level is, I think, super important, but again, would allow that quicker and freer flow of funds through a system like PAPS. And then the third thing for me is interoperability. The one thing that retail wallets don't necessarily do very well is allow you to move money from one wallet to another wallet. And clearly, something like PAPS allows that if we can start to plug in the M-Pesas of the world, et cetera, into the PAPS system, either directly or via a provider. But if we can do that, then I think it means that you start to create that interdependency, that interoperability across country wallets, across time zones, across currencies, that would allow that thinking, I think, to progress from the sort of retail level to the commercial level. That's a lot of work, all three of those things. But I think, as you mentioned at the start, we're all so comfortable doing that with our own money, but we're not comfortable doing it with our institutions' money. And we've got to figure out those steps, I think, that help us bridge that gap.
Yeah, interoperability is key, and this was also your thought, Mark, when we discuss. I know that you have something to share with the audience about interoperability and how MasterCard has infrastructure and to make the functioning more efficient.
Sure. So, I mean, I think just trying to lead off my friend Mark here. So I think when we think about structural change, which would ultimately help the future of Africa, I think we have to recognize there's a couple of opportunities. So MasterCard now obviously is not so obsessed with just the card flows, but also looks at all flows. So we embrace remittances, we embrace bank-to-bank, we embrace crypto. And so I think what we do need to recognize is the opportunity to standardize and regulate for crypto. And there is some utility on the continent. And so I think there's an opportunity for governments and policymakers to look at crypto and to understand the utility of it and to provide for that. And at MasterCard, we've actually bought services and we've collaborated with governments so that they can actually trace the origin of a crypto and can trace it through the system so that they feel a little bit more at ease with the risk that they're bringing into their ecosystem. I think also just thinking about the opportunities for the continent in the credit space and credit enablement, coming back to my point earlier, you know, we have to believe that this kind of trend of what I would call open data to open finance is critical. And so I think that open banking guidelines or open finance guidelines are really important. And what I mean by that is the opportunity to share data so that we have a more competitive ecosystem, not just between the banks, but between the banks and the telcos and the other players where customers are potentially living in proprietary or otherwise ecosystems, and they can actually have a more competitive way of living their life, whether it be insurance, whether it be investments, whether it be everyday banking. And open banking starts to provide for that. So what we need to see from policymakers is embracing that opportunity and thinking thoughtfully about how they pull through open banking as a concept. And rather do that, rather than the regulator stepping in, which is what happened in Europe, and actually saying, we need to do this because we don't have a competitive landscape. What that will do in itself, it will then enable credit, which ultimately a lot of these countries are looking to unlock and need to unlock if we're going to elevate business, elevate the SME, and create that broader ripple effect into GDP.
Thank you, Mark. Let's move on, because we talk about on the retail banking, commercial banking aspect. Now on the capital market view, Timmy, how the technology can attract local capital to the market?
Thank you very much. I think as we were speaking, I saw my dear brother Edo, who is the CEO of the BRVM. It's very difficult to speak about AELP and not talk about him. In fact, AELP got launched under his watch as president of the Association of Exchanges, and so that's quite remarkable. Now, to your question as to how, you know, perhaps through tech you can facilitate and fast-track capital flow locally, I like what Mark, I believe, said, there are two marks, that only 3% of credit is actually currently met on the continent. And that starts to spill out a few things. One, first and foremost, when you look just at the capital market itself today, you look at exchanges and that whole sort of space, one of the key drivers you're seeing, or key maybe structural trends, is increasing preference for issuers and needs for, I guess, demand for capital to be more private-based rather than public. So that's one structural thing happening in the world of exchanges. So you'd hear lots of delistings, for example, across global exchanges. You would hear, for example, very few listings coming in. At the same time, it's not to say that capital is not being formed. It's just being formed in private markets. All of these unicorns in technology, for example, there's a huge transactions that happen. They just don't come to public markets. And so exchanges are increasingly having to go private to say, well, besides just offering access for public capital, how do I facilitate private capital? And that brings in this credit conversation, because that world of private credit then becomes very critical, both for the sustainability of the exchanges, but also for creating real impact. And so how do you do that? You do that through technology, and there's quite a lot of work that's happening on that at the moment. I look at a place like Nigeria, 80 million mobile phone lines in one telco alone, for example. But you compare that with perhaps maybe 100,000 active retail investors in the country. So there's a big gap there. And by the way, all of your data, your KYC is already owned by the telco. They've got your banking information on there, or in fact, they have wallets. How do you merge those worlds? Because when you do that, and again, that capital can flow easily, then you have all of these SMEs that need access to credit, access to financing, and then you solve that through tech, through the capital market. So that's one, I think, very big piece structurally that is happening. And the second thing that I will speak to as to technology is one of the things that we did in 2021. We had this landmark offering. You'd be surprised that in most markets on the continent, a lot of trading or, in fact, account initiation still tends to be very manual. You've got to call people. It's a bit elaborate process, takes time. How do you, for example, get capital market, whether it's to get an account open or to do transactions on maybe 5 clicks? This is one problem set I think a lot of exchanges are trying to solve, to say, look, on a mobile phone, on a device, 5, 6 clicks, you want to set up an account, 5, 6 clicks, you want to trade, you want to move capital, you want it to settle, and things like that. And I think, again, when that world sort of comes together, you would see a lot more sort of acceleration of capital flow through capital markets.
Thank you for this great vision for the capital markets. Let's move to Aliou. What are your thoughts?
On capital markets or
Yeah.
in
No, on generally on
digital financial
yes.
services?
Yes.
Look, I would say for us, I run the financial sector the group at IFC, and I would say half of my team is in advisory, and I would say 60% of advisory is in digital financial services somehow. Because I think one of the, I would say, chances of Africa is that while we see all these challenges, today technology can allow us to go much faster than many countries has done it. Maybe just to give you some numbers from Findex from last year, banking penetration in Africa from 2014 to 21 increased from 29% to 40%. That's overall. But if you look at the mobile financial services side, it increased from 34 to 55% of Africa. And this was 2021. So if you go maybe 2 years later, this is going very, very fast. And the underlying reason is the mobile, phone phenomenon, which has allowed people to have connectivity. So I think a lot of things that were done in 20 years in many regions can be done in Africa in 5 to 10 years. And we started with payment, but today we are looking at the agtech, space. You'll be surprised how many agricultural tech companies are operating in Africa who are the most advanced in the world. So, and we plan to really leverage that because that really allows us to penetrate the economy, cut through informality, because once you can connect everyone, the farmers all the way to the end buyer, the SMEs, the micro, the individuals, then you can really accelerate a number of things in Africa. And just to finish by one good example, I remember 2006 or 7, I was in DC and I was doing a project in Africa. There was a Chinese officer from our China office. we went to see banks in Lomé, and at the end, I asked her, so what do you think about banking in Africa? He said, actually, it's more advanced than in China. Okay, this was 2006. Today, you look at Ant Financial and how they automated everything in China. You don't have menus on restaurant. It's all QR code. You sit down, you order, you pay. It's all in QR codes. So I would say just that we have a tremendous opportunity with digital financial services. And I think if we put our heads together between DFIs, banks, MasterCard, Visa, and all the players, we can really change a lot of things in Africa and do it fast.
Thank you, Aliou. And I will finish with you, Alain. In the view of the growing use of digital financial services, as Aliou stated, what types of investment infrastructure do you think are essential to ensure a better flow of these capital?
Yep. I think if we listen to various speakers, and I think one of the distinguished speakers talked about harmonization of legal and regulatory framework. It sounds quite simple, but I believe it's quite complex. Because when you harmonize, you don't harmonize at the lower level. Everyone has to come up to the highest level, otherwise it doesn't work. And I know that in Mauritius, which at some point we were grey listed by FATF, there has been a lot of effort, investment, education to be able to get out from the FATF grey list. And if I look at across Africa, where 23 countries fall within the FATF framework, 10 of them are grey listed. So there is an enormous amount of work that needs to be done to be able to bring all the countries to the right level. Otherwise, I think Mark mentioned it, today we've got to be in compliant with the highest standards. And source of funds is a big issue. KYC is a big issue. How are we sure that the funds are in compliance with our AML CFT standards is an issue. So I think it's something which we need to look at and start working on, because it's a journey that might take quite a lot of time for us to harmonize. That's what I see is a major challenge. The next challenge I would think would be around, when we talk about technology, we need also to talk about security, cyber security. We are all impacted today by the risk of cyber attacks. And when we connect systems, it amplifies the problem, because then unless all of the participants prescribe to the right standards, use the right technology, we run higher risk. So I think cyber is not to be discounted. It has to be looked in parallel to development of technology. There's been lots of talk about interoperability, bearing in mind that technology, I don't know how many of you are involved in approving technology budget, but it's a major capital expenditure, which is also a constraint when you think about scaling up technology. So lots of challenges, but not unsurmountable, because we need to start now to be able to get to the right level.
Thank you, Alain. I will rebound on what you said lately, cybersecurity. We did a barometer, AFIS barometer, in collaboration with Deloitte, and one of the major investment that will be done by the financial institution in the cybersecurity. And you're all talking about interconnection of Visa, MasterCard, capital markets, retail and commercial banks. But here, cybersecurity is key, and attacks are more and more sophisticated, so we need to invest in such infrastructure. We have 15 minutes to finish this panel session, and I want to talk about my last key point, which is cooperation. what role should central banks and monetary authority play? And again, I will start with the Mark Price, because when we discussed, you mentioned that during the GFC shortage of dollars was actually a problem that hit the developed markets. So that the Fed created dollar swap lines with the major central banks to ensure the free exchange of dollar within the liquidity system. In Africa, nobody is in position of strength to provide that dollar swap lines. And I will ask you a question because I want to know, do you think that the tokenization of minerals resources such as gold, digital gold token with the backing of central bank can give people more confidence, because there are lots of central banks in Africa virtually that got gold. So we could look at solving the shortage of dollars, if I can get back to this, with a gold-backed solution that can make feeling more comfortable. So what do you think?
Thanks, Rama. This is an area as a bank, Standard Chartered, are very interested in terms of digital assets, tokenization, and building a center of excellence around that in Dubai going forward. There are certain central banks around the region that are already working on CBDCs, the e-Naira being one. And I think that's fantastic for the local markets, but perhaps doesn't translate so well across the region. Will somebody in Kenya be willing to receive ENGN? Not sure. But, I can probably hazard a guess that they're going to be less willing than more willing. So I think clearly we talked about interoperability. Yes, if you plug the central bank digital currencies into things like PAPS, so you can auto-convert, then wonderful. But that's to come in the future. But I do think tokenized assets is a really interesting space because, as you mentioned, a lot of the African countries are resource rich, whether it be oil, gas, minerals. And I think that interplay between the digital assets and the capital markets Temi was talking about is a very interesting way to look at the future of finance. Part of the problems that we see currently around the world, around the free flow of money, or because that system of finance developed over many, many years. Africa has a real chance to sort of step away from that and reinvent that flow of money inside of the region in a digital context, rather than using SWIFT or other, perhaps more historic ways of creating that flow. And I think that tokenization is one way to do that. So imagine a world where the Nigerian oil production, a piece of that is tokenized. A piece of that is able to be accessed on the Nigerian Stock Exchange. So it can be traded both in terms of those retail investors that Temi was talking about, but that tokenized asset itself is almost the same as a currency you can use to pay between individuals. So it's not just an asset, it's also a payment mechanism. And I think that helps, again, remove reliance upon dollars, because you can move things that have a store of value around the system without that dependency in place. And would you be more willing to accept an ENGN or a e-barrel of dollar? E-barrel of dollar? E-oil barrel, sorry. I think, certainly I can see from my own personal perspective, I'd be much more interested in receiving that asset, because it is an asset, as opposed to a central bank e-currency. So I think this whole space is super interesting in the context of Africa, because of being able to just jump over some of those historic payment infrastructures and create our own going forward.
Thank you. What about you, Temi? You talk about regarding the cooperation, what about advocacy?
Thank you. Let me just add to what Mark just said, because it's very critical. There's actually a new class of investors. If I look across most of West Africa, a lot of the Africa Rising story is on the back of this young demography. Well, ironically, many of those, class of people, many of that class of people actually do not speak the language of traditional financial products. So you talk to them about shares or bonds, they probably just haven't ever come across it.
Yes.
You talk to them about digital assets, they understand it. And so one of the things that one has to ask is, how do you package your traditional products today in this language that they understand? So whether this is real estate, whether these are shares, just like you said, whether this is a barrel of crude oil, it's the same, perhaps, commercial sort of benefit and exposure, but it's in a different language that people tend to understand. Let me end on the subject of advocacy. It's extremely critical. In my world, one of the things that you find is that there isn't a shortage of ideas. It's actually the barrier of whether the regulators, for the most part, or just at the sovereign level, this lack of understanding or perhaps lack of willingness to adopt some of these things. And so a lot of effort has to go into advocacy. I spoke, for example, about how the traditional business of capital markets is under stress and constraint. A lot of African capital markets were developed on the back of very conscious government action, government policy to spur listings, to spur transactions. And so we need to constantly go back there to make sure that the subject is on the consciousness and the radar and to devote those resources to it. Thank you.
What is your thought again, Aliu, on this cooperation? Or maybe if you want to continue to talk about the tokenization of these assets to cope with the dollar shortage.
Yeah. Thank you very much. Look, I have to be very diplomatic here because, when you need someone to move the needle, then you have to also manage that partnership. I work a lot in financial, sector in Europe and then across the world. And I think, economies grow through innovation, entrepreneurship, and all of that. But the reality also is that you have potential for side effect or unintended consequences of innovation and everything. So regulators have to balance that. I think that's why they are in between, sometimes seen as, stopping the process. But at the same time, if you think of it, there is a lot of potential for abusing people who don't know what they're dealing with. I mean, I'm in finance for a long time, but honestly, I still would say crypto is not something that I'm even, going to look at now because I don't know what it means. So I think that balance between, protecting innovation or advancing innovation versus protecting the general public, retail, or, unsavvy investors is very critical. What I've seen is over time, regulators always come around when they know better and they understand better what they're dealing with. And just to give you a very concrete example, because that's very telling, I remember when I first moved to this region, I met with the central bank and we were discussing about telcos going into financial services. And the message was very clear. Telcos has nothing to do with financial services, okay? You fast forward 8 years later, the same central bank is issuing electronic, money to telcos and fintechs. At the time, it was not that they were, trying to stop everything. It's just that they were not comfortable and didn't understand enough. But over time, with education and partnership, and then they come around. So I always try to look at the both sides. It's like if you are in a bank, you want to lend to a customer, and your credit department says, "Hey, this customer has some issues." You're not happy, okay? You say, "Oh, why are you swapping me?" and this and that. But at the end of the day, it's always looking at these two sides of the coin. But what is unavoidable and nobody can stop it is progress, and technology will change everything because the cost of telecoms has gone down so much. The cost of transaction has gone down so much that it just make it easier and convenient for people to do it. I started paying my bills 6 months ago with Wave. You know why? Because I don't want to go 5 hours or send my driver to go pay a bill if I can do it immediately and for free. What Wave did in Senegal, and I know there is a lot of noise. I mean, we work with all, with everybody, so I'm not praising Wave particularly. What I'm saying is the competition has brought down the cost of payment within country from 3% to 1%. That's massive saving for people who transfer, get their money for transfers, and it costs them 10% of whatever amount they transfer. So those are really the benefit. And then government see the benefit, the regulators see the benefit to the public and to the market in general, and then they become more comfortable and let people, deploy innovative and convenient services.
Sorry, just to build on that point, I think the opportunity that switching to a more digital payments infrastructure also provides that isn't talked about enough is that as you bring down those costs at a transaction level significantly, it then becomes a viable proposition for governments to tax on those transactions. Because if you're only paying 0.25% or 0.5% or something, then having a little bit of that siphoned off to the government, or an extra little bit siphoned off to the government, can help improve that fiscal situation for the countries as people shift to that digital payment infrastructure.
We discussed it yesterday, so yeah. We have 5 minutes left, 4 minutes, 1 minute each of you. Let me ask you a last question. You have 1 minute. From where you sit, what factors will define the financial industry and particularly the movement of capital on the continent over the next decade? I will start with you, Mark. You, Mark, yeah. Sorry.
No, it's not at all. So I think that from a MasterCard standpoint, we have to believe that financial inclusion, embracing the underserved SME, means that there's going to be hundreds of millions of credentials out there for interoperability. What's going to be critical for us to get there is a focus on economics, a focus on distribution, and a focus on customer experience.
Thank you, Mark. It's your turn now, Aliou. From where you sit again, and what factors will define the financial industry, particularly the movement of capital?
Look, I would just summarize very, very simply. Asia has done a miracle in 20 years. And I would say we should repeat the same. There are lessons to be learned. And I think it's doable. Whether you take the financial services in general, the payment, or the security settlement, but you talk generally across the board, I think technology and collaboration, connectivity among different ecosystem partners will allow us to go maybe potentially even faster than Asia.
Thank you, Aliou. What about you, Alain? Are you also enthusiastic?
Well, I take it back to the theme of the conference, which is to get more African champions. And I do believe that we need to get our value chain sorted out. Payments will be an enabler, capital flows will be an enabler, but fundamentally, we need to have those trade, those value chain, those ecosystem to work, and then we can, in parallel, find solutions for those goods to move. And I think these have to be taken in synchrony with each other, rather than thinking just on one side payments and on the other side trade of movement of goods and services.
Thank you, Alain. And last with you, Mark.
So I agree with all that's been said, so I'm not going to add to that. I guess one thing that stands out to me is to do all of this, it's going to cost a lot of money. And we're very used to the idea of ECA-backed financing for ports, roads, rail. I wonder, is there an opportunity for ECA-backed financing around digital and financial infrastructure assets in the same way as we think about it for those physical assets? So what do I mean by that? Building the cloud infrastructure to hold this eKYC or e-document checks capability. Building that interoperability API network that means that people can plug and play and money can move more freely. I think thinking about not just physical infrastructure, but digital infrastructure through ECA financing is something that has occurred to me recently that I think we need to look at very seriously.
So can I just say
Yes,
something?
you can finish.
So not to be a killjoy, but I think we're all kind of singing from the same hymn sheet here. But the previous panel spoke about a single market. And I think that's a great idea. But I think we also have to recognize all the things we'd like to see fall in place, but we also have to recognize there's some headwinds. And some of those headwinds are that we continue to see national solutions actually pop up, and we have to solve for each country individually. And so we have to kind of think about the delta, the increasing delta between the vision and actually what's happening on the ground, and how we're going to solve for that. Because if we don't solve for that, we won't get to the vision.
Exactly. Regional blocks. Thank you so much to all of you, Mark, Alain, Aliou, and again, Mark. And we have been left by Temi, who has an emergency, but I was very happy and delighted to have this conversation with all of you. I hope maybe you had, I will accept only one question. Do you have one question in the audience? Yes, there is one question.
Thank you. Ayo Adigbe from Nigeria. A bit of digression. I hear when Temi was talking about, I think it was Temi who said, when you think big and execute. To start with, a bit of digression, in African Trade Agreement, we actually need more visa to travel within Africa compared to when you're in Europe. If we have not broken down the border barrier of physical movement, I'm just wondering how we could do that with the flow of FX within Africa. That's number one. The second one is, it won't completely be out of place if the leaders in Africa could come together and begin to think, how do we have a common trade agreement in terms of the currency we're spending? So if, for example, I don't need to bother about currency when I'm dealing with South Africa from Nigeria, from Cote d'Ivoire to Mali, to Kigali. I mean, if we can come together and have a common currency, just like you have euros, just like you have the dollars in America, it won't be out of place. It may be something we're thinking like it's factual, it's not possible, but then you said we need to think big and execute it. So maybe that would be a direction we need to follow as a fallout of this meeting. Thank you.
Thank you. I think maybe the first question, do you want to answer it? Aliou?
I think I use that phraseology, and
Yes.
I think, look, I think it's always a messaging, and you know, I would quote another mentor who told me, you know, Aliou, nothing worthwhile happens overnight. So I understand the impatience, but the reality is that the way the world works is you have to have very big ambitions. Let's say you are doing something like 10 now, you want to go to 100. You say, I'm going to go to 100 in X amount of time, knowing that if I reach 50, it's still great. So it's just you know, different ways to look at the same thing, but nothing, you know, at the that involve governments, agreements, and you know, central banks, you know, coordination and everything happens overnight. So I just want to balance what I said with reality. It's always better to aim high and push people hard, and then, you know, go fast as much as possible, instead of not taking any, you know, not having any view or any plan at all. So just want to qualify a little bit what I said.
Okay, so this panel session is finished. I thank you, all of you, for your audience. I thank all the panelists for your vision, sharing your vision. It's more optimistic than I expected, but we have to work together to make it happen. Just to get back to your sentences earlier. So thank you.